Not only is the U.S. economy strong enough to handle a rate hike, the economy could use the help, says David Kelly. He's the chief global strategist at JPMorgan Funds. Hi, David.
Hi.
This is kind of a contrarian view. I hear a lot of people saying, some people saying, if you raise rates right now, it's a fragile recovery. You could derail the recovery.
Yes, I think it's very unfortunate that people don't look under the hood and think about the transmission mechanisms by which interest rates actually affect the economy. Because our research suggests that when you raise rates from a very low level, you actually stimulate the economy. And the first few rate hikes actually stimulate the economy. And then thereafter, some of the effects of it actually tighten up in the economy. So eventually, raising rates from a higher level will slow the economy. But in the short run, it helps the economy.
How is that? What does it do to help you in the short run?
Well, a few different things. The biggest thing is it pushes up interest income. We estimate that a 1% increase in short-term interest rates will add to interest income by about $65 billion over and on top of any increase in interest expense. So it's a big positive for the consumer sector. Remember, most people have fixed-rate mortgages. They don't go up when short-term rates go up. But all their savings accounts, they get higher interest. That puts more income into the consumer sector. But it actually has a number of other effects. First of all, a confidence effect. What we found is that when interest rates rise, people feel like the Federal Reserve thinks the economy is okay, so they feel more confident. That helps. There's also an expectations effect. People want to buy or to borrow money when rates are cheap. If the Federal Reserve begins to raise rates, they think, oh, maybe they're going to raise them some more. Better get ahead of the crowd.
You better lock in that mortgage now.
Exactly.
Go for that house.
Also, we've seen a positive wealth effect in the past. When rates rise from a low level, again, investors think the economy is doing better, and so they tend to bid up stock prices. So we have a positive wealth effect. We've got a positive confidence effect, a positive expectations effect. We've got a positive income effect. The big negative that people talk about is, well, doesn't that make it harder for me to afford to buy a house? But the thing is, when rates are this low, it's not really the mortgage payment that's stopping you. People have a very hard time putting together the down payment. People have a very hard time achieving the credit score, but mortgage payments are actually not a binding constraint right now. If you can make the down payment, you got the credit score, you can make the mortgage payment. You can make the mortgage payment if interest rates were 1% higher than they are right now. So we think that as you raise rates from a low level, you don't really hurt the housing market in that way, but you help the economy in lots of other ways, and that's why it actually stimulates economic growth.
Stimulate the economy by removing some of your stimulative effect, some of your efforts.
Some of the drag, and I mean, another way of looking at this is, why is it that for 20 years the Japanese have had a zero interest rate policy and it hasn't stimulated anything? Why is it that, in the past, in both 1991 and in 2000, when we came out of those recessions, our recoveries were very shallow because the Federal Reserve cut rates as we were recovering? I mean, the truth is, at very low levels, cutting interest rates doesn't stimulate the economy. Actually, raising interest rates stimulates the economy. It's just, again, I don't know why we have a hard time grasping this. It's like a medicine. You could say that 2 aspirin is good for you, and maybe it is. That doesn't mean 12 aspirin is good for you. And this extraordinary monetary stimulus is actually not helping the economy.
Let's hope we're not going to wait until we're 20 years into it in the U.S. to figure out whether it works.
I hope so.
Thanks for sharing your view, David.
Sure.